Good morning. I know I'm dressing like Michael J. Fox in the 1980s. Sorry. Actually, I bought it for a cricket match. Actually, no, not cricket. Croquet. What's up, BB? Sad wants to know if interest rates for borrowing and deposits are the same. But your bank probably pays you 0, and your mortgage probably has a higher interest rate than 0. All right, let's get going. Hey, welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of putting together trade plans for this beautiful New York trading session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. My name is Wayne McDonell. I'm a currency trader just like you. I used to have a paper route. Then I worked in the nonprofit world with the likes of George Soros. Then I became an entrepreneur in the Silicon Valley. Then I became a venture capitalist. And then while studying money, I came across this thing called Forex, and it said it was $2 trillion a day. And I laughed because that sounded stupid. What do you mean $2 trillion a day? If it's $2 trillion a year, I wouldn't believe it. But $2 trillion a day, that is just, it's so stupid. So I looked into it. Oh my God, it's true. So I quit my job as a venture capitalist after being promoted to vice president of the firm. Yeah, the firm, we had about 300 employees. Whew. Amazing. 2 entire floors of a skyscraper dedicated to our firm. So I walked into the office and I quit. And I said, I want to become a Forex trader. Amazing, right? Amazing. So here I am. All right. Anyways, almost 20 years later, and this still is the big gig, the best gig I've ever seen. So ask questions, get involved. I'll do my best to share everything with you. I just want to let you know I look at Forex as a business and not as a get-rich-quick scheme. I'm about creating and adding value, which is the ultimate business model ever. So when you look at Forex, it's about consistency, about planning, about strategy and tactics aligning, low leverage, consistent returns over long periods of time. It's the get rich slow and steady business model. If that makes sense to you, you are in the right place. If you want to get rich quick, you probably got no money anyway, so you probably want to try to go into, there's a lot of other YouTubers that will show you their Lamborghinis and show you how they put big trades on and get out of those trades quickly. If that's what you want, if that's what you need, this ain't the place for you. There's plenty of kids doing that on YouTube, so go there. But if you want to look at Forex trading as a business, then please subscribe to this YouTube channel. And I've been here longer than your last guru was a trader, maybe even longer than they've been alive. So I've been doing live training and coaching and trading in various formats, going all the way back to HotCom. And then before YouTube was even invented, before YouTube was even an idea, I was already sharing my trading tactics and strategies. So think about that. 15 to 20 years I've been here every single day. Oh, yeah, Lucas, that's awesome, because we got some coming in today. A couple of accounts are getting hit today. So be quick. Yeah, email me like now, I guess, account number and password. Cool. But triggers are being, hit today, so that's cool. So anyways, right on, ask questions, get involved. I'll share. There's resources I'd like to offer to you. Why? Because over the last 20 years, people have asked. So what have I done? In the description below this video, you'll find a link to my book. I wrote that many years ago. But you'll notice that my trading tactics have not changed. My trading strategies have not changed, so they're still valid. So there's that. There's a link in the description below to about an 80-minute free foreign exchange trading training course. It's all right. So that's in the description below. If you want to join FX Bootcamp, it's $88 a year. That's in the link below. If you want a trustworthy broker that has fast execution speed, narrow spreads, wide swaps, the link to Tradersway is in the description below. Okay, they earned my loyalty and respect about 8 years ago, approximately, I think. That's when the Swiss National Bank blew up. Blew up Alpari, blew up FXCM USA. Why did those brokers go out of business? I don't know. But Tradersway was stable. They were fine. They were not negatively impacted because they actually executed the trades into the interbanking system. And I'm like, oh my God, that's awesome. So Tradersway, a little boutique foreign exchange trading firm, was unhurt. And then these big behemoth brokers went out of business. So which one's more stable? The big behemoth brokers or the little boutique foreign exchange trading firm that actually enters your trades into the interbanking system? You choose. Okay, I choose Tradersway. Cool. So here he is. Okay. Yeah, Brian says, I've been steady Eddie. My relationship with Brian started, what, was it 2006? 2005, 2006 maybe? I don't know. Dude. Right? And Jim's probably here. Jim goes back even farther than that. So yeah, so that's pretty cool anyways. So thank you for being in my life, guys. You guys are good people. All right. Aussie down, Euro up, CAD down, Pound down, Kiwi down, Swissy up, Yen up, Dollar neutral. Are we waiting for this Fed meeting coming up maybe? Okay. Craziness, huh? So let's try to pick through the crumbs here. Okay, let's do a different color. Okay, Aussie down and Kiwi down. Okay, that would be Asia Pacific risk off maybe. Wait, CAD's down. Okay, is it commodities? Aussie down, Kiwi down, CAD down. Those are our commodity plays. They're down. So maybe that's okay. But wait, pound is down. Euro's up a little bit, but generally down. Dollar doing nothing. Yen up. Swissy up. So where are the weird ones? Okay, this is probably just a counter of what's happening everywhere else, and probably hitting targets. Dollar neutral. So everything else is risk off, risk off, risk off, risk off, risk off, risk off. Stock market falling. Cool. By the way, I started. Is it risk off? Well, people are not sure about the Fed meeting coming up, so they're getting out of position. So it's kind of like that. I think people are waiting for that Fed meeting next week, and it's a big risk event, especially since not everybody agrees of what's happening. So that's kind of thing. But also it's seasonality, and I think that's what you're, on is what you're saying. I told you guys 6 months ago that the stock market was coming down in January and the dollar would be strong. And it is. So how do you feel about that, by the way? I can tell you very smart people never saw this coming. It's not that I'm smarter. It's just they're smart at doing some things, like wealth managers, for example. They manage wealth, or do they? No, they raise money. They're constantly salesmen, but they're not very good at understanding the market. So that's why they poo-poo on technical analysis, and that's why they poo-poo on day trading and stuff, because they're like, oh, it's just market timing. Yeah. So anyways, it's kind of interesting. So it's happening, and you're welcome. Okay, Mike says, hey, and Brent and crude coming down. Yeah, I know. We already know that. I already have it all set up. Okay, that we have Norway weakening, Sweden weakening, CAD weakening, and it's because we've set all this up. So literally in the day trading group, I think we were on this 3 days ago. Certainly 2 days ago that we saw this coming. On says, I know it's seasonality, but I didn't expect deep pullbacks. How many people heard me say the stock market would come down 10%, maybe more? How many people? 10%, like not 2%, not 3%, 10% or more. Anybody? Yeah. So the NASDAQ technically was down 10% from the November high yesterday, and I started buying stuff. Yeah. Okay. So you guys know, like, it's facts. It's just, dude, I'm telling you. Yeah. So I don't know if it's 10 or 30. I don't think it's 30. Is it 20? I don't know. Okay. That's why I use technical analysis. Okay. Yeah, Magnific says, hey, will I learn how to trade your strategies from my book? Yeah, and the video training courses are good too. FX Bootcamp's only $88. I'm telling you, you will be shocked and amazed and in awe of how much information is in the training courses for $88. I'm telling you, you won't believe it. For example, I got invited to go to a Harvard class this summer. It's a 3-day class. Okay. And it's $18,000. Okay. Interesting, right? A lot of what I learned at the FX Bootcamp training courses, I learned at Harvard. I spent $18,000 a month going to Harvard. I don't know about a month, but whatever. I spent 6 figures on Harvard, as you must imagine. And a lot of that information's in that course. I stole it from Harvard. Dude, $88 is a joke. It's stupid. It's stupid cheap. Yeah, that's right. The book, in some cases, I think the book costs $60 or something, right? So anyways, dude, like, you can buy the book, but just join FX Bootcamp too. I mean, I don't know. You can buy the book. I don't care. I think I don't actually even cash the checks anymore. I got a few somewhere. I don't know. Okay. Yeah, what's the 3-day course? Gee whiz. I looked at it because I want to teach some of you guys how to raise money and do pitches and stuff and start your own firms. That's a mastermind group we've talked about in the past. And this one had to do with startups. Now, I'm a VC and I'm an experienced high-tech entrepreneur. And I used to teach high-tech entrepreneurs how to raise money. I'd introduce them to venture capitalists. We did pitch nights where they'd go and do presentations on stage in front of, 200 venture capitalists, and they'd raise millions of dollars. But I'd bring in speech coaches and all this kind of stuff and help them build their decks and stuff. And this class was kind of like that. And I thought, okay, that'd be interesting. But then I thought, no, I don't want to spend 18 grand on something I already know, right? Where can I buy the book? Dude, Amazon.com. What kind of question is that? Where can you buy the book? Toys R Us? Oh, wait, that went out of business. But anyways, how can I join your day trading group? Why don't you try joining FX Bootcamp? That's where it is. Cool. So anyways, yeah. What's the name of the book? The link is in the description below, including the name. Okay, Stanislaus? Cool. And by the way, I don't care if you buy the book or not. Like I said, I don't even cash the checks anymore. I don't even know. Who cares? Right? All right. Is that right, Dan? Someone bought it? G'day, Hitler. Alan says, could you talk about your view on the future of Forex concerning neural networks and changes in behavior? Not really. Okay. The value you're going to provide to a client will be your ability to synthesize what's likely to happen in the future and help them prepare for the future. If you're talking about neural networks and building algos and all that, that's going to be trading what's happening now. Okay? Because you're looking at complicated data and you're looking for patterns and you're going to make decisions based on the patterns, but you're not predicting the future. You're sort of analyzing the recent past and trading probabilities or something, right? But that doesn't tell you how you should manage your money if the Fed is going to be raising interest rates for the next 2 years. So that's where your value is going to be, regardless of an algo. Okay. Are we having some risk on today? No, we're not. Not currently. Okay. But maybe, right? We're hitting targets. So here we go. This is what we call a full Monty. We were trapped in this range for a very long time. And then it broke out. So technically, I would have set it up like this. And now it's broken to the upside. And technically, if I was a bull, I would set it up this way. And what do you do now? Well, praying never hurts. Okay. Dad says, I got money in REITs. Yeah, I got a lot of money in REITs. Gold. I despise gold. And some inflation-proof bonds. All right. So you got some tips. All right. Cool. Sounds like you're playing it safe. Okay, playing it safe, nothing wrong with that. Okay, and even REITs are pretty safe. So it sounds like, Dan, you're closer to the mature part of your investment life cycle. If you were young, that wouldn't be the right move, most likely. All right, so let's take a look here. We're all the way back. One of these months, just really crazy. Okay. We had this obvious move. We hit here, counter trend. Okay. By the way, if you guys pay the $88, you'll find out how predictable that is. Okay. Crazy. So what we don't know now is what happens next. And there's going to be a bit of a battle because buyers should be buying down here again. And not based on January, but based on February. So again, people in the day trading group and in the swing trading group, we're already setting up February and trades on February. We're already thinking about February, March, and April. So I did the swing trading group last night. We're talking about April in our conversations. So what you're doing on a 15-minute chart may not be looking that forward. So what we do is we look that forward and then reverse engineer down into a 15-minute chart. And that might give us a strategic advantage. Maybe not an absolute advantage, because it doesn't mean you're a bad trader and we're a better trader. But strategically, we might have an advantage because we would know what trades to hold on to for, let's say, 2 or 3 or 4 weeks at a time, versus if you're stuck on a 15-minute chart, you're probably going to get out today or tomorrow. And that would be a big trade, holding a trade for 24 hours. Where we could enter the trade the same. So let's say we buy here. You might be in it and you get out here. We might be in it and be in it for 9 weeks. And of course, if we're in it for 9 weeks going up, we took the same risk. We did the same work here. You made 50 pips. We made 500 pips, but there's no extra work. But the value creation that I was talking about is understanding which trades are worth holding for days and days and days, or even weeks and weeks and weeks, and which trades you should get out on. Now, I can tell you though, this type of volatility that we've been going through the last 9 weeks or so is quite unusual. And that has to do with, again, the crosswinds of disagreement about the Fed policy and its meaning, and Omicron. Now, I heard something in the media the other day, and they called it, like, they said there's going to be a problem because they said Omicron starts with an O, which is the last letter in the Greek alphabet. And so what comes after Omicron if that's the last letter? Now that's Omega, isn't it? And Omicron is Ohm, isn't it? It's not Omega. It's Ohm. It's the middle. Does anyone know their Greek? I'm like, wow. I mean, they're talking about it in the news. And I'm like, I don't think they know what they're talking about. But I'll be honest with you, I'm not an expert in Greek. But I thought Ohm meant middle and Omega meant end. And they're saying Omega. I'm like, it's not Omega. Homage, right? But are you saying this is the last? Is Ohm and Om the same? I thought they were different. But again, I'm not an expert in Greek, but I thought ohm meant middle. Like in electricity, how many ohms and amps? Ohms and amps, but not omega. Pi is next. Yeah, that's right. So Peccary agrees with me, right? Omega and homage is probably similar, but anyways. All right, so nonetheless, interesting. And going back to seek and destroy here, yeah, this is unusual activity. And what you need to look at and understand is that people don't understand. What you need to understand is people don't understand. What we all need to understand is that there's disagreement of what's going to happen, and therefore what is the result or impact on the market. Okay? So this shows me indecision. Okay? Or you could say, well, Sweden is definitely in a weakening mode. Okay, fine. That's true. Okay, that's fine. That's fine. So therefore, this was an opportunity. Okay? And now the next opportunity is going to look something like that. Okay? Cool. So let's take going back to what we were staring at is these commodities. Days ago, we had this coming down. Now, this, by the way, changes things. Let me move this analysis. Okay. What this chart says on the 4-hour is this. Just so you know, that's what it says. It's not my opinion. That's what that says. You'll have to decide if it's going to go a little higher and then come around to make an inverse head or make a head and shoulders or something. But what this is suggesting is double top, or that the upward momentum is coming to an end. Okay. Right on, Bakes. Bakes says, hey, man, for $88, it seems cheap. And you're already learning stuff, right? Yeah. Right on. Yeah. I know it should be $1,000 for sure. For sure. Okay. So then Norway should be coming down, Bitcoin. Okay. So Bitcoin's becoming interesting. 37,500 was our number. We're at 38,000. Pretty amazing, right? Have you done like the fundamentals course? Right, the central banking course and the macroeconomics course. Have you done those yet? Well, you guys are still in the taking control course. This is great. And you're blown away in the first one. Yeah. Cool. Okay, take a look at some exotics. Okay. So this goes all the way back to yesterday. Okay, the trade plan yesterday was right down to here, and then a lower high, and then a lower low. So we'll see how that shapes up. Okay, so what I might do today, depending on if we get a pullback or not, is I might try again selling at 2050 and build a position here. Okay, so you earn a huge swap when you're short. Yeah, right on, Bakes. Yeah, it's just amazing. Like, I was fascinated in the beginning about how much I didn't know. Right? I was fascinated by that. And when I was teaching myself how to trade, what I would do is I would write things down that I didn't know. And then I'd pick one thing. So for example, I studied MACD very intently. And as I studied MACD and read about, so Gerald Appel, okay, Gerald Appel invented the moving average convergence divergence indicator. And so I studied him, and I found some of his work from the 1980s. And I studied that. And as I was studying, what I would write down the stuff that was that came up that I didn't understand. I'm like, what is that? And then what is that? And then what is that? And then once I understood MACD, I'd go and I'd tackle this. And let's say in here they talk about something. I don't know. I'll make something up. Yield curve. And I'm like, wow, I don't know what that is. And so I studied the yield curve. And when that comes up, it would talk about something else. So I'd study that and I'd put that on my to-do list. And I would just go from one to another, no particular order, total hyperlinking from one thing to another. And I would learn as I would go and kind of put pieces together. And sometimes it wouldn't make sense until 3, 4, 5 years later, I'd come across that topic again. And I'm like, oh yeah, that thing. But in the beginning, I spent most of the time on technical analysis. And I got quite good, if I may say so. Like I traded 1 year on the 1 minute chart only. Okay. I tried it for a year because I was told you couldn't do it. So I'm like, really? So anyway, so I got pretty good at technical analysis, at least reasonably good. And then I had this problem though. It was difficult to know when the end was coming because first of all, there's two shortcomings at that point. I knew absolutely nothing about fundamentals. Absolutely nothing. Zip. Okay. And the second thing is I didn't use pivots at that point in the very beginning. I didn't use pivots. Okay. For example, even today, they're not even in your indicator list in your trading platform. Like, for example, on my MT4 on my cell phone, I can't put pivot points on my chart. I'm like, what? So imagine 20 years ago, it wasn't something, okay? And so I was pretty good in technical analysis, but it bothered me, for example, I didn't know when to take profit. So all I could do is buy, exit for day trading, let's say, buy, exit. And I'd keep doing that, right, until it ended. But the problem is I never could predict when it would end. So every time I traded, my trading couldn't kind of stop and reverse until I lost money. I always had to lose money. Okay? So another way is buy, add another one, and then if I add another one, what happens if it heads down? Well, I end up losing these two trades. Okay? This one might break even or small loss. This one is the full loss. And then now I only got two. But I always found that I was giving almost 50% of my money back every time. Because I had to learn that I was wrong, that the trend ended. So I wanted to know more, and then that's how I got into fundamentals and then pivots. Okay? Kind of interesting, right? Yeah, now Brian's like, yeah, maybe we can get some good carry trades. Peso is one that I'm quite hopeful on for the rest of the year. So here we are coming up to 2050, and that's what I just said. Maybe I can catch this up on high. Okay, 2050, so we're basically there, and maybe that's something. Now, if I'm able to catch that, I would like to stay on it for a year, not a day. Now, there's going to be a lot of ups and downs, and maybe during the course of that year, this gets knocked out, and I don't make any money. But it might be worth a shot. Okay. What this says is that I have a couple of numbers that are important right now. Okay. One of them is, well, let me show you both. If I'm a bear on USD Mexican peso, sorry, MXN, sorry, can't write and think. I have two prices in which I would like to sell. That price there and that price there. Okay, so there is some reasonable possibility that that is the high for 2022. Okay. You understand that? Now, maybe it goes like this first and then around. So if I was able to sell here now, okay, that could possibly be the high for 2022. So strategically here, I have two trade plans on USD Mexican peso. If I get a chance now to sell at 2050 where we are, that's a lower high. And I intend to be short the entire year, generally speaking. Now, along the way, there'll be ups and downs, but what I'm thinking is it would look like this. Okay? Again, very generally speaking. Okay, so on and so forth. And the target based on that is 18. So I know the price. I just don't know what day or even what month we'll hit that bottom. Most likely we'll get to this price level by July 1st. And this level down here around November. So now I'll simplify even more. Spring, summer, fall. Now Peccary says that's Peccary's weakness, exiting purely based on price action. I'll tell you, that never gets easy. And I'm always confronting the issue of technicals versus fundamentals, and some seasonality in there. And it's my constant battle. So it's not like you'll have to study more, okay, and it'll get easier. It's always a decision because we're trading chaos. We like to think that inside the chaos we have all the answers, but we don't, because we always are in chaotic markets. And we try to hang on to some patterns that help us make us understand what might be happening, but it's really easy to just say, well, we know what's happening because of the pattern. Well, that's a fallacy. We can try to use the pattern to understand what might be happening, but it's a fallacy to think that we know. And so it's built into what we do. If this was easy, we would all be rich, except if we were all that good at it, nobody would be rich. Because we'd have efficient markets. You understand? If it was easy, we would all be doing the right thing always. Therefore, there wouldn't be much opportunity to make profit. Okay. Anyways. No, that's not a George Soros thing. No. So he is, I mean, maybe, I guess what you're trying to say is what people expect versus versus what's happening. That's kind of what he's looking at. But I think what he does is overly, when people explain what he does, I think they oversimplify what he does. So sort of, but not quite. Okay. Well, that's the Stanislaus. He has this thing where, okay, this is what the market expects. Okay. So that's what's being priced in. And you would see that in your technical analysis, let's say. But then he says, this is what's actually happening in the moment. But people are not there yet. And it's the difference between what is and what everyone else is doing. So I look at this kind of differently. And I look at this at the efficient market theory, EMT. I think, and this is behavioral finance now that we're talking about. So when you're studying EMT, what I think is most of the time the market is mostly efficient. Most of the time people are rational. And then there are periods where they're not rational. Okay. I don't think we're there yet, but I think what's creating the volatility right now is, let's say we don't know what this pink line is. Maybe it's more like this. Okay. So I'm not trying to say the market's going to crash. Okay. But what I'm saying is, which pink line is going to happen? Straight, radical, right? Like continue trend, maybe flatten trend, increase or decrease because of the Fed. Well, the thing is, the market's trading and it's telling me that we're all analyzing it differently. Okay? So it's not like the market is being influenced. The market is. You have to understand it just is. It's a thing. It's the summary of all our opinions. But nothing is average. That's right? So you have to what would this look like if there was no average? Well, you would get, kurtosis, really, right? Because we all disagree with what's happening. So you'd have to have a normal distribution. So as you guys know, a normal distribution, that's terrible. A normal distribution usually looks like this. But what's happening now is we're getting sort of this. Okay? And let's say no hikes, oversimplified, right? 5 hikes, one hike, 2 hikes, 1, 2, 3, and 4. Okay? And the interesting thing is these tails are quite different. Like this area here, you see how many people think the Fed has to or will raise lots of interest? This is probably, actually, let me draw that slightly different. There's probably nobody doing this now, right? So I don't even know what you call that. Does anybody know? See, the kurtosis is about the fat tails, but nobody thinks they're not going to hike. So it's 1, 2, 3, 4, 5, and we got a fat right tail and no left tail. So it's kind of strange, right? And what that means is there's, let's say, 5 different strategies being deployed right now. Okay? And so it's not that the market's being influenced. The market is making decisions. And even the smartest traders and investors will kind of disagree. And I listen and I read and I see analysts, let's say, or I see the analysis is based on models, of course, and therefore models have variables, and then variables also, and then models have assumptions. And one of the things I see baked into people's analysis, and therefore their bias and opinion, is what the Fed should do, which I think is a fallacy, because now that's an opinion. Well, you think the Fed should do something, but you're not on the Fed. Why don't you analyze who's making the decision? That would be smarter. So I try to analyze who's making the decision, and I've been saying 2, okay? And now maybe I'm being influenced a little bit because I'm a human, and maybe it's 3 this year. Maybe now they raise in March. What I was saying is they were going to raise in June and December. So I'm sort of like 2.5 rate hikes right now because there's so much baked into the March meeting that they might just do it because. But I'll tell you, that's not what they're saying. So what they're saying is 2. What the market is saying is 3 or 4. And some people, like Jamie Dimon, is saying 7. Okay, but whatever. But maybe not all this year. But so is it 2? Is it 3? Is it 4? Well, these are all different strategies. They mean different things. Now, what I see is inflation is coming down. Okay? Inflation is coming down. Not year over year, which is 7%. Year over year is, 7%. I don't agree with that number. This is what the media talks about. But I'm an economist, not a mediaist. Okay? I'm an economist. I'm like, year over year, why do I care about that? I care about prices last year. I care about prices last month and prices now. And I see this is inflation's already peaked and coming back around. I see the stock market not going up 30% next year, but 10%. Which means I'm going to make 20% because if I started buying at -10, so it's going to go from -10 to +10, I'm going to get 20% this year. Great. But not 30%. So I see that coming down. I see growth slowing down. But up, but slowing. Why? Well, the government's not going to give out $10 trillion next year, right? So anyways, I still see it logically too. A lot of people are going to disagree with me, and I could be wrong. It could be 3. Some people are even saying 4. Now, I also see election. Okay? Now, I have analyzed elections in multiple ways over a long period of time. The one I could be wrong about the Fed because Jay Powell is not an economist. He's a businessman, and he's more influenced by the market and the media than Grandma Yellen was, than Ben Bernanke was. Because they're economists. They're nerds. They listen to their nerdy friends. They have no respect for the media. They don't care. It's like Elon Musk. He doesn't care about people. People are stupid, according to Elon Musk. He doesn't care. He thinks the average person's pathetic. Okay? But Jay Powell, he's not an economist. I wouldn't call him a jock either, but, he's a businessman. So he will listen to the media a little bit more, and so maybe that's a risk. But I can tell you, over the last 50 years, the Fed doesn't mess with the market during election period. Now, Robin says he doesn't say transitory, but that he still believes it is. I believe that too. To somewhat that is true. That's, let's say, mostly true. But he had to get reconfirmed. Remember that issue? I said his change in stance was mostly political because he had to be reconfirmed. So part of that is he had to say, well, he's going to jack up interest rates. He's going to taper out the mortgage-backed securities and transitory, he's going to remove that. But I already think things are happening. Okay. Okay. Some things are sticky, but some things are coming down. Okay. Now, of course, China could shut down its supply chain because of COVID. Apparently, China's killing all their hamsters. Isn't that sad? Isn't that sad? So if China is that afraid, maybe they shut their economy down, we get hit by supply chain, and once again, inflation comes back. But that's supply side economics, not demand side, and the Fed can't really do anything about that anyways. Okay. Well, yeah, Yellen, well, everyone is a central banker wants 2%. Now, when I first started trading 20 years ago, this was a new concept, and I bought a couple of books on inflation targeting. And at that point, it was actually a bad word, a bad phrase. Okay? And central bankers wouldn't even admit it. So that was a new concept. And now they would admit it. And central banks want 2% inflation. Now, if you take my macroeconomics course, I will tell you the actual number is 2.2%. Okay, I did some research, and I show you in the course. I do some research, but going back 50 to 100 years. That's the number. Okay, that's long-term growth. So you guys might recall this where you have, let's say, we'll call this nominal GDP, and then we have our cycles. And Y is equal to 2.2. Okay, and Y is not just nominal. If it's Y star, it's potential. So, okay, so potential growth in the United States going back 50 years is equal to 2.2%. The economy grows 2.2% on average over a very long period of time. Okay? So, by definition then, that's what Grandma Yellen wants. That's what Ben Bernanke wants. That's what Jay Powell wants. And a central banker then must, okay, so a year ago when I was teaching you guys this stuff, we had just gotten through the trough, and we were probably about here, and then we were approaching this. And I taught you that that's called the productivity gap. Now we're probably above potential because of all the stupid money. A Matrix said, Powell said very early on, well, it's not that he said it. They changed the policy to be between 2 and 3%. And that's a new policy. But he didn't say 7 either. Okay. Okay. So this is the productivity gap. And now we're through it. Okay? And that's where, okay, you need to reduce quantitative easing and raise interest rates. And that's why we're doing it now. Okay? Nothing there is shocking. How about this Rand? You guys like Rand? Beautiful, huh? So it farted around. Okay. What is this telling you? Despite the strong US dollar, okay, on the long run, okay, USD should be down. Because the dollar's been reasonably strong lately, and this is still moving. So South Africa is playing out much longer term in its move than what's going on with the Fed. As you'll see, this started last month. So this trade, do you see this, guys? This plan here, this down. Why does it look like this? Why is it so steeply dropped? Because when I drew that, okay, we were here. And none of this existed yet. It wasn't part of the chart. It was just blank. So I had to squeeze it in. And you can see double top, then I have it coming up, and then I have it heading down to here. Cool. Well, I would say that's pretty good. Do you want me to predict the future for you? Okay. That's pretty good. That's good. Yeah. Look at that. More than 3 times, 300% higher interest that you collect on that. Remember, peso pays 25. And by the way, they're not equal, so don't get too excited. But, okay, this is 89. Now you have to convert these because there's the exchange rate and pips and all that kind of stuff. So it doesn't you're not going to earn $89 per standard lot every day. There's some calculations and some fees and stuff. But my point is that's actually very high. Okay. That's very high. Okay. So if it was straightforward, and it's not, but I'm saying if you invested $1,000, right, you would collect, let's say, $88 per year. Sorry, $89 per year. Okay. Cool. But you're leveraged what? 50 to 1? So the thing is, you have $50,000, so it's 89 times 50. So let's just say $450. Okay? But you only have $1,000 invested. Okay? So your internal rate of return is 45% per year collecting interest. Now, these numbers are not going to work out because that's not actually the number you're going to collect. And we don't know the dollar value of those points and stuff, but I'm trying to show you how interesting this is. Okay? If you're leveraged 100 to 1, okay, you're collecting 90% internal rate of return. Okay, and then of course the big thing here is then it's plus pips. Okay, I'm only talking about swap collection, interest payments. Remember, you're loaning money to South Africa. Okay, you're an international financier. And if you can't get a good-looking person to pay attention to you, when you tell them you're an international financier, then you're not playing the game right. You're a what? Well, because I'm so altruistic, I try to lend emerging markets money. I want to see growth in education, growth in I don't know all the words. I'm too tired. It's Friday. I don't know all the words. I want to see an improvement in child mortality rates. I want to do this. I want to do that. You want to see good things happen in South Africa. That's all I'm trying to say. Yeah, right. So anyways. Plus, when you're at the pearly gates, you get to say, well, Peter, here's the thing. I made a few mistakes in my life, that's for sure. And but I helped out a lot of emerging markets by lending them money. And I think that should be good enough to get through the gates. I think I helped more than I hurt. So what do you think, Pete? Will you let me through? Peter Rama, guarding the gates. Oh, there's my pound yen trade from yesterday. Yeah. My oh my, sweet potato pie. Well, the thing is, and I always I don't like such language, right? So I'm a capitalist and I'm proud of it. Do capitalists exploit? No. Exploiting people exploit. Okay? Okay, you could be the president of an African country. Nobody says you have to be a dictator. Okay, you can be a capitalist. Nobody says you have to exploit people. Okay, a true capitalist creates value from nothing. Okay, but not all capitalists are good. Sure. Not all socialists are bad. Maybe. Okay? But if you're truly a capitalist / entrepreneur, and I'm an entrepreneurial capitalist, so, right, I think socialists are exploiters. I think they want to get everybody to work at the factory. Okay? Because pretty soon, right, you'll be working in a big factory. Your voice will be lost. You'll have a number for an ID, not a name. You won't know who your boss or your boss's boss's boss is. And you'll pay money to your union to represent you to your boss, but you don't even know your union representative. All you know is money comes out of your paycheck. That's what socialists do. And I believe that they exploit the masses. They don't represent the masses, they exploit them. You just find yourself building a pyramid and you don't even know why. But if you stop building, you get whipped. And then you get charged for lunch. Great. So I'm an entrepreneurial capitalist, because you might say, well, that's what capitalists do. I don't think so. Okay. When that happened in the United States, let's say around 1900, that wasn't because of capitalists. That was because of socialists. So going back to entrepreneurialism, which is the key part of capitalism, you don't exploit anyone. You have to attract the best workers. So capitalism will say, hey man, we got an awesome break room full of all the soda and Snapples. I remember working in the Silicon Valley, man. Snapples. We got Snapples in the break room, and we have a ping pong table. And we have bean bags. You should come work for us. Dude, when I worked at Apple, people wore pajamas to work. And the company didn't care because they're like, dude, we just want you to be happy and comfortable. So one of the things we would do at Apple is everybody hated the cubes, because cubes are socialist pig dog environments. But you had to do something to organize, okay, your working space. So one of the things we did to address that, and it was fully supported by the management, that you would decorate your cube. And people had like pirate flags and themes going on in their, in their cubes. And it was like, dude, capitalism was about being free and about being an individual. decorate your cube, show up in your pajamas, but show up on time and do a good frickin' job, or we'll fire you and find someone more productive and more motivated to make this company great. We'd have team meetings and off-sites. Everybody's happy. Okay? That's what capitalism does. So when you think capitalism, don't think about exploitation. Think about ping pong tables and think about bean bags and free Snapple, baby. Anything to keep you at work. No, you might work 18 hours a day, but you have a mission and you have a motivation and you have an excitement about contribution. And then if you make this place great, maybe you get wealthy. Maybe you get a pay raise. Maybe you get stock options. Maybe you get a free offsite. Maybe the company will rent all of amusement park and everyone will go on roller coasters and free hot dogs and there'll be fireworks. I mean, that's what capitalism is. And if you get rid of capitalism, where does the exploitation comes from? Okay, I remember I helped someone get out of some Eastern European country, and I can't remember what country it was. And it was part of this leadership program I did in this nonprofit group. So I'm in this nonprofit group, as you guys know. This is the whole George Soros guy, connection. So anyways, I was working with IBM, and I created a job for this person that came from Bulgaria, I think it was. And he worked at IBM for about a year and a half. And then this was back when IBM was struggling. And they said, well, the relationship was going to end and they need to send him back to Bulgaria. And I said, well, what's up? And they're like, well, we're missing some targets. And they said, it's just a budget thing. It's not a big deal. Just, we're going to fire him, right? Well, technically the contract came to an end, right? So I have this conversation with this guy that's going to lose his job. I'm like, oh, cool. I hope you had a good experience. You're going to go back to Bulgaria. And he's like, dude, I'm going to have to leave IBM, go back home and work in a cement factory. He's like, I want to stay here. I want to stay in the Silicon Valley. I want to keep working at IBM. So I walked back to that manager's office, and I'll never forget this. And I said to her, hey, can I have a private conversation with you? Can I shut your door? And I remember it too. She said, yeah, sure. A private conversation, sure. So I shut her office door, and I'll never forget this. There was dust behind the door because it had never been shut before. And I had a frank conversation with her about changing the world, making the world a better place. And you do it by impacting individuals, in particular, that guy who I got to know very well. She got to know very well over 18 months. And when I opened that door again, he was able to stay. They rehired him. I turned her around and she kept him on. And when I think of the world, I think of you get to have free Snapples and bean bags, and you play ping pong in the break room, and you're motivated to work as much as you want and contribute as much as you want to the greater good so that you can get rewarded. And you might work 18 hours a day, but nobody ever asked you, and there's nobody with a whip. Or you can work in a cement factory. And I think dark, I think gray, and I don't think Snapples and bean bags. And one is capitalist, one is more socialist, for sure. And I don't think capitalism is exploitive. I don't. I really don't. And if that's your form of capitalism, you got the wrong form, or you have a primitive form, you have a basic form, that's more of a dictatorship or just full-on socialist pig dog nonsense. Okay, so if that's your capitalism, you've never even seen capitalism, son. I've been in the depths of capitalism, and it's nothing but joy and happiness. Because what happens is you're so motivated to meet the mission of the organization and contribute. That means you're productive. You're contributing to what's the mission of the organization? Well, of course, every organization has a different mission, but they're all similar in the sense that you're adding value. You wake up in the morning and you're excited to go to work and you want to be productive because you're going to create and add value that makes the world, even if it's just in a little way, better than it was before your company came around. And if you get filthy, stinking rich doing it, that's cool too. Because capitalism sorts out the mediocre from the awesome. And if you're not even mediocre, you go out of business and nobody cares. In a capitalist society like America, it's easy to go bankrupt because they want you to go bankrupt. Get out. You suck as a business. If you go to a socialist country, that company stays in business forever. In America, if you suck, get out of the market. We're not interested. Go bankrupt, go do something else. Mediocre, you'll hang around and all that kind of stuff. And maybe you'll be inspired if you hire better people to be more motivated or have a better mission and they're more motivated. But you're sitting around thinking, well, we'd like to be more productive, so how do we motivate people? Socialists don't think that. And of course, the better of the best thrive. And they get the best people, and they get the best investors, and they get the best clients, and they grow, and they get the best stock price, and people retire early with more money they can possibly spend in a lifetime, and they leave it to their children. Okay? Cool. Capitalism does not exploit. Now, that might be a message you get. I don't know. I'm not even talking to somebody in particular, so I'm not saying this to somebody, but to everybody. If your message is that rich people exploit and are bad and take, and that capitalism is exploitative, it exploits, you're being misspoken to. You're getting a bag full of lies. It doesn't even make sense. If you study capitalism, it doesn't even make sense. It can't be true. That's not the point of capitalism. So be very, very careful. If you're in a capitalist world and you don't add or create value, you go out of business. And once again, if exploitation comes from socialism that takes away your individualness, doesn't listen to your voice or your ideas, doesn't care about you personally, how can we motivate employee number 328572864 to be 0.2% more productive? No. They're not interested in motivating you. They're not interested in you as an individual. Okay? Motivation is not part of socialism. Okay? So exploitation of the masses, taking away individual voices, is socialism. Just beat them into submission. We want more productivity? Beat them harder. Make them work longer. Do you understand the language? Make them work longer. In capitalism, you motivate someone to accomplish the mission. And they choose to work longer because they love what they do. I tie GDP to personal self-worth. Do you wake up in the morning and feel good about your contribution? Or do you wake up in the morning and feel good about the welfare you collected? Oh, great. I got my welfare check. I feel so happy about myself. My contribution to society is so great. I don't think that's true. Okay? People want to wake up and contribute and be compensated for their contribution and have a voice that is heard and listened to so that they can contribute in their way. And when they get that, they feel valuable. They feel appreciated. And if your company doesn't do that for you, fire your frickin' company and go work for someone that does offer that to you. It's a free country. You can do what you want. Okay? You can't do that in Spain because there's 12% unemployment when the economy is good. And you can't go bankrupt in Spain because you'll have a scarlet letter on your chest that says, I failed being an entrepreneur 47 years ago, so don't lend me money now. See, that's why you lose entrepreneurialism in a situation like that. Yeah, maybe, Maida. I don't know. Or the country you live in tells you that all day, every day. I don't know. But you know what? I hope I speak clearly so that you understand my point of view. That's all. I'm trying to communicate effectively. I'm a passionate person. I'm an entrepreneur. I am a capitalist. And I'm sharing as clearly as possible my point of view. And I think you heard it. And I think you understand my point of view. You can disagree with me. But remember, I don't have opinions. I have conclusions from doing research and facts, fact finding, if you will. And nowhere in the history of the world will you find a successful socialist country. Now, I don't know about democracy. I actually don't think that one's going to win out. I think that was a great experiment. That's going to be tough, but capitalism works. Greed is good. Greed is right. Greed works. What do I mean by greed? Well, let's just change that. Productivity is good. Productivity is right. Productivity is good. So let's talk about greed. If it's not greed, then what is it? I think people want to be worth something and be respected and be listened to, and they want to contribute. I believe we're a herding animal, where our species likes to move in herds, and we like to have a society around us. And so whether your society is your family or your society is your church or your society is your coworkers, we want to be valued, we want to be listened to, and we want to contribute to the cause, the mission. And then ideally, be compensated for all we do. And capitalism is the best model humans have created over 9,000 years of practicing civility and organization of our civilization. And nothing else has worked. A dictator destroys value. And socialism creates some sort of moderate value creation through exploitation. Yeah, you'll get some toilet paper from the toilet paper factory, but it won't be very good. But they created some toilet paper, all right? But they only get it through exploiting workers, not motivating workers, and certainly not through listening to the individual voice. So peace on earth, may the pips be with you, may your profits be above average. Have a wonderful weekend. Okay, and remember, As a trader, you're an individual here, and your goal every day is to create value. And if you can do that consistently over long periods of time, you will be handsomely rewarded. So focus on creating value. Try to predict the rest of the month, the rest of the quarter, the rest of the year, and use technical analysis to confirm or deny your hypotheses. That's called scientific methodology. It's hard work, but hopefully you're motivated by the potential reward and opportunity you have in front of you. And if you're not willing to do the work, if you're not able to do the work, if you can't find the strength to get out of bed and do what needs to get done, then you will not be handsomely rewarded. You will be like everybody else. Above average, but mediocre. See you on Monday. Cheers.